In agribusiness today, there's currently a supply crunch for both hogs and cattle. However, on the pork side, it's not showing up in the numbers just yet. In today's profit briefing, the guys at Pro Farmer weigh in on how long this supply game could last.
You know, while grain prices have been on the slide, livestock prices have been on the rise, and have even seen new contract highs in the hog market. Cattle have got a little bit of work to do to get back up to the highs, but this move in hogs, what's behind this? What are the fundamentals behind the move?
Well, a lot of what the market's been talking about is the PED virus and, you know, how the impact that's going to have now down the road, but it's still supportive here to nearby futures. Even though the last Hogs and Pigs report didn't signal that the numbers were, you know, they came in higher, much higher than what everybody anticipated them to be.
Exactly. So this real crunch on the supply side of the hog market, really, it shouldn't show up until later in the fourth quarter, right?
Right. So, you know, I think that there's probably some demand at play, too, in here. In the fact that the demand is chewing through the supply that we have right now, making it probably feel like it's a little bit tighter than it actually is.
Okay, the pork product market, talking about chewing through it. Pork product has been trading real well, staying competitive and very attractive in the meat case.
Right. And the biggest thing there is we got choice boxes back above, you know, $200.
Yeah, on the beef side.
So the retailer is going to look at the pork and say, you know, I might want to feature a little bit more of that because they don't want to get stuck with high-priced beef. So they put more pork in features, and as a result, you do chew through more supply.
Exactly. Okay, now on the beef side, you just said it, heavyweight choice boxes up over $200 again. We've got $132, $133 cash trade going on out there, and that is really a supply side concern.
Yes, you know, we know that supplies are tightening in here. I think that really the focal point now is going to be, does that, you know, demand, do they keep buying the choice box beef above $200? We've seen it in the past where it spiked up here earlier this year and the demand completely dried up and then it caused us to pull back.
Okay, let's get some coverage on. Do we need to get some hedges on in hogs when we're making new contract highs?
Well, just the mere fact that you said new contract highs suggests that yes, we should, because we're still through a seasonally heavy supply period now. Till at least, you know, probably mid-January or so before it starts to ease back a little bit.
Okay, but that cattle market, man, it just keeps grinding higher.
Yeah.
Can you get into hedges in that market?
I wouldn't, to be honest with you. I think grinding higher is probably the right thing to say. The tight supplies limit the downside on pullbacks, but we are going to have some pullbacks, I think, as we move along the path here. But the upside is really open, I think.
And one last thing, if you do get into those hog hedges, be careful, because that market still has some upside potential if the PED virus is as bad as what they say.
Right, and the attitudes are bullish right now, so they still want to buy breaks.
All right, look for higher cattle and hog prices ahead. For Brian Grete and all the editors at Pro Farmer in Cedar Falls, Iowa, I'm Chip Flory.
If you're a subscriber to the Pro Farmer newsletter, here's what you can expect when it comes out today. The team will look at the impressive string of corn export sales and is PEDV threatening domestic soybean meal demand. Plus, as we mentioned, the Farm Bill is heading into the home stretch, but that's a long stretch.
Pro Farmer. Make great decisions and become a member today. Call or visit profarmer.com.